Welcome to another video by the Trader Guy, and this one is going to be on something that I use all of the time. I do this, I don't know, maybe weekly, every other week, and that is look into relative strength. Now, relative strength is a term that's used in a lot of different scenarios, and now let me explain what my definition of relative strength is, and we can kind of take it from there. When I say relative strength, I'm talking about the strength of a particular currency. Notice that I said particular currency and not currency pair. A huge but subtle difference there. See, most of the time what happens is traders get involved in Forex and they look at things like, the Kiwi dollar, dollar CAD, maybe, whatever, and maybe dollar yen, and they look at them as separate markets, and they are. However, there is some certain interconnectedness to Forex. And this is something that most people just simply don't pay attention to. Um, it's very odd because it's very simple, and this was kind of one of those things where nobody had ever taught me this. It's kind of stupid to think now because it hit me like a lightning bolt because it was just so obvious. What I found is over time, if you look at the forex markets, I mean, really, what are you trying to do? You're trying to buy strong currencies, um, and sell weak currencies. You're trying to buy currencies that are going to rise in value with currencies that are falling in value. Pretty simple. I mean, that's really all there is to forex. You're trying to match the strong with the weak. But what happened is I used to have a guy who I spent a lot of time with and trading, and we would do things like this. We would um, both place a trade, and let's just say, and this changed daily, obviously, but let's say I would buy euro dollar, and he would buy pound dollar. Okay, what would happen is at the end of the trade, I would get maybe, let's just say I got 65 pips, and he'd end up with like 117. And this would happen day after day after day. So I started looking into it. And I'm like, okay, why am I getting smoked by this guy, even though ostensibly I'm making money and I'm going in the same direction? I'm not. It's not like I'm going counter to what he's doing. He's selling the dollar, and so am I. But for some reason, uh, it just seemed like every time I placed a trade, it just wasn't as good as his. And he didn't know it, but he was doing this. He was doing this, what I call relative strength. So let's go ahead and explain uh, how we can maximize our profits so we don't end up in a situation like this. And also, perhaps keep us out of bad trades because we don't want to be in those either. So, what I'll do is I'll take certain currencies, and like I said, this is every couple weeks. This gives me a general idea of the trend, over the last, say, several months or whatever, and I do it every couple weeks just so I know kind of where I want to be. So what I'll do is I'll take a currency like the New Zealand dollar, and I will go ahead and I will look through as many New Zealand dollar pairs as I can find. Now, my broker happens to have 100, I think 29 pairs or something. But even when I didn't use this broker, I would get demos from other brokers that offered a lot of pairs that my particular broker that I was using at the time didn't offer. And it doesn't matter. You don't necessarily need to place a trade in all these pairs. What you're doing is you're just trying to find some type of obvious pattern. So, and I could go on forever. New Zealand's crossed against Lord knows how many currency pairs. Um, but let's just say that I have these pairs to look from and a handful more. Let's just try to make this as thorough as possible. So what I'll do is I'll write down the currency, and then I'll write down positive or negative. And I go through and I make a little table. And I go through each of these charts and I look for the trend. I look what it's been doing over the last several months. And let's just say there were a total of a dozen possible currency pairs involving the New Zealand dollar that I could look at. And I found that the New Zealand dollar was positive in 9 of the 12 possible pairs. So I look at that and I think, okay, well, in general, the New Zealand dollar's fairly lofty. So what I'll do is I will draw those results up there on my list and go through and I'll erase all this. And let's go ahead and just come up with some other fictional numbers, and you'll see where I'm going with this. The next currency that I look at is the US dollar, and I find that it is positive, and there will be more US dollar based pairs obviously, and I'm just picking numbers out of thin air. But let's just say I find that it's positive in 8, but it's negative in 21. Fairly negative. I go on to another currency, and let's say in this particular case it's the Swiss franc. And I find that the Swiss franc is positive in 3, but it's negative in like 19. So it's very negative. And then I go ahead and I do the euro. The euro is positive in 17, negative in say like 6. Let's do one more just for good measure here. British pound is positive in 13, negative in 7. These are random numbers, but when you look through all these charts, this is what you come up with, okay? So again, I'm trying to, this is all Forex is, I'm trying to buy strongest, or strong, and sell weak. But in this particular case, this gives me the ability by going through all these to do strongest and weakest, which is a little bit different concept. In this particular setup, I see that the euro looks pretty strong. It's not the only strong one, but I might want to buy the euro. And I look through this, I look for something weak, and in this particular case, it's the Swiss franc. So I want to buy the euro Swiss. Now, what will happen will be this, typically. Let's just say this is a 5% move, over the course of however many days or weeks. But what will happen is you'll find that you could have bought, for example, Kiwi Swiss. And it will have moved up too, but it might be like 3.5%. And you could buy Pound Swiss, and maybe it would move up 1.8%. Well, you see where I'm going with this. This is about maximizing returns, because for that matter, you could have bought dollar Swiss, and maybe it went up, I don't know, 0.3% or something. You'll find over time, by going through and measuring what's the strongest and what's the weakest and matching them up, that's the way to go. Now, for me personally, I like to see a technical setup as well. So what I'll do is I will take all of this information that I have available by going through these charts and looking at the trends, and I should say that if it is a sideways move and it's been range bound, I make note of that, but I don't count it on either side of the ledger. It's kind of neither here nor there. Sometimes you will see situations where most of them are sideways. If that's the case, you just know you don't want to be involved in that currency. Not that it's bad, it's just not moving. You need it to move to make money. So what I'll do is I'll come up with a buy or a shopping list of sorts, and it might be, it might be Kiwi dollar, it might be pound dollar, euro yen. I mean, it could be whatever. And then what I do is I sit around and I look at my charts and I wait for technical setups in, one of these pairs in my shopping list. By doing that, I know where I want to be in the market. And by knowing where I want to be and matching up what has historically in the recent time frames or over the last several months, or better yet, if you can find a chart that has been decidedly negative, and find several of them in a currency. A while back, you saw uh, the Czech crown appreciate rapidly against a lot of different currencies. You find something that's really hot, where a lot of money's flowing into, and you look into it and you set up that against the weaker currencies. And back then, it was dollar Czech. You look for the technical setups, you look where you want to be, and you get involved in it. In this particular case, it would have been a sell signal, and this was a couple years ago, so certainly this isn't necessarily true now. And you look for sell signals at each one of these technical areas, support and resistance, and you are letting the market work with you. Doesn't mean that this works every time. No, of course it doesn't. But this puts the odds in your favor. And that's what trading Forex is all about. So in review, find what's strongest by looking around the market. Don't get stuck looking at one, New Zealand dollar chart and compartmentalizing that and saying, okay, New Zealand dollar is doing this, but New Zealand Swiss is doing this. So which one should I trade? Look at the whole market. It really doesn't have to be difficult. If you're willing to spend a little bit of time, you can come up with a buy-in list, and you know exactly where you want to be as far as what markets, and then it's just a matter of finding the setups. It takes a lot of the excitement out of it. I get it, but it also can make sure you're on the right side of the trade most of the time. And again, it doesn't mean that every one of them is going to win, but if you have the market's momentum and sentiment with you, yeah, you definitely have one of the most important pieces of the Forex puzzle uh, in your hand. If you enjoyed this video, I invite you to come to thetraderguy.com. I have a free educational forum there with plenty of videos. If you have any questions, feel free to email me at chris@thetraderguy.com. And I thank you for watching the video and hope to see you in the forums. Thanks.